Thanks so much for joining us here today. We're in the middle of the week. I'm Marlon Bowling with you, your tour guide to the ag commodities. Well, I want to welcome aboard Brian Hoops of Midwest Market Solutions. Now, he is in Springfield, Missouri at the headquarters. And Brian, last time you and I talked, you were kind of in line to maybe get some foul winter weather there, but has it really made its appearance yet or not?
Not really. They've canceled, schools and everything around here with a little bit of ice, but no snow yet. Now it's been pushed back maybe another 24 hours. And, a lot of times when you keep pushing back a system, it just disappears altogether. And that may be the case where it was supposed to be pretty well snowing right now, and it's not doing much of anything at all at this point. So we'll see what happens. But, they're, like I said, they're pushing things back. And this system is expected to go across the entire plains and disrupt a little bit of the cattle feeding regions. So market, has priced in some of that, as well as higher cash cattle trade. Will be interesting to see how the cattle market reacts now going forward in the rest of the week.
All right, well, we'll get to that in a moment. I have some new information that just came across the wire as I was coming down to the studio, and it is from USDA. We did have an overnight export sale to talk about. This time it is soybeans, and the buyer, it's mysterious. It's unknown today, and the amount is 380,000 tons. Let me check for when this is for delivery. Well, now this is different. It's for the current marketing year. Now, all the earlier purchases by China were earmarked for a year out from now. This one is for delivery anytime. Is that significant?
Yeah, it's probably going to end up being China. That's most likely case that this unknown destination is going to be China. It's going to be for this marketing year, this current marketing year. It's significant from the standpoint that they don't have a lot on the books for this year, and they are starting to add to it as weather in South America continues to be hot, dry in the forecast, especially for the last half of February. It's going to hurt the soybean crop, and I would expect we'll start to see some corn business as well, as if the forecast holds true, it's going to be very detrimental for that second corn crop that's being planted very soon here in Brazil. So this forecast is not ideal at all, and it does suggest that importers should acquire more product and get that around them, especially corn and soybeans.
Well, let's look at our overnight trade then, and we were higher again in the grains. Our quotes provided by bar charts show March corn 4 higher at 638 3/4. December corn kind of dragging its feet. It was only up 1.5 pennies at 579 1/4. Once again, all the action seemed to be focused on soybeans. Look at that March contract. It's almost beginning to be old hat. It was 30 cents higher this morning at 15.58 1/2. Remember, Brian, years ago, people used to think you were nuts if you would say beans in the teens, and usually when you heard that phrase, that meant the rally was over. Well, not anymore. Now that's the normal, and here we are well above the $15 mark on soybeans. So let's take a look at our wheat market overnight. Did they follow suit? Well, in Chicago, you had the March contract actually 5 3/4 higher at 774 3/4. If you go to the Kansas City market, that's where there could have been some impact maybe from the wintry weather. From what I saw, it looked like it maybe missed a lot of the important growing areas. 8.5 higher on the March at 794 3/4. And if you look at Minneapolis wheat overnight on the March contract, 10.5 higher at 925 1/2. So solid gains everywhere you look. Again, Brian, we'll come back in a moment, and I want to talk with you about the livestock trade amidst that winter storm when we come back. All right, now this morning we had some ADP jobs numbers that came out, and let's go back to Brian Hoops. Brian, from what I understand, those numbers were way below expectations this time around. Could that have a spillover impact on things like demand for meat?
Yeah, it was a huge miss on the numbers out this morning. Of course, we'll have more numbers later this week, jobless claims Thursday, and our monthly unemployment numbers coming out on Friday. So a couple more numbers for the market to get a chance to kind of get a foothold on things here. But stock market has not sold off much following the release of the ADP numbers. If it does start to sell off during the session, it could be detrimental to the cattle market. As we mentioned earlier, a lot of the cattle feeding regions had missed on some of this bad weather. And if the stock market drops, I think the cattle could follow as well. As we're starting to hear some cash trade developing this week, $1 to $3 better in the north, and really nothing in the south to develop quite yet. But we rallied to hit contract highs yesterday, and I think we're going to stay strong here, but we could certainly see a dip on some profit taking if that stock market does weaken.
So the Dow is only down 15 points right now. Okay, when we wrapped up yesterday on live cattle, we were higher across the board. We had the April up 85 cents. We were at 148.37. If you look at the feeder cattle trade, this is how we wrapped up yesterday. On that March contract, the nearby contract, we were 67 higher at 163.70. And on lean hogs yesterday, when we headed home for the day, April was up $1.97 at 97.67. So we'll see if they follow through or not today, especially after that jobs data. Brian, thanks for talking with us. Appreciate it. You stay warm, stay safe out there. Brian Hoops of Midwest Market Solutions. Janet, with that, back to you.